Hello everyone, welcome back to the Daily Gold YouTube channel. And if you're new, welcome to the Daily Gold YouTube channel. This video is being recorded on the afternoon of Friday, December 6, 2024. And in this video, as I always do on Fridays, I'm going to recap the week in precious metals. And it was an interesting week in precious metals. I have the numbers here. Gold, I believe, was down a little bit on the week, but silver was up 1.5%. GDXJ was down less than 1%. GDX was down over 2%, and the silver juniors were also down a little bit. So interesting week. Silver did the best. Everything else, not that great. And as we get into it here, the reality for me is investors are starting to lose interest in gold and silver, or they will as the stock market and crypto are making new all-time highs. And clearly, precious metals are in correction mode. But last week we talked about how volatility has started to decline. And if that continues, I mean, it's not necessarily a bad thing for a market, but as volatility continues to decline, that also entails investors starting to lose interest in that market. And so that's where we're at here as winter begins. So let me get into the video. I have a few big picture thoughts as well. So first things first, let's talk about gold against the 60-40 portfolio. I know you longtime listeners may be tired of hearing about it, but big picture, the reality is you need a secular bear market in the stock market for a secular bull market in precious metals. And the one time that didn't happen was here in the mid to late 60s. Gold stocks had this huge breakout in 1964, broke out of a 27-year base. And then from this point up to the 68 peak, they went up 300% in that period and outperformed the stock market, even though the stock market was still in a secular bull. And so I've said that this breakout in gold from the 13-year cup and handle pattern here and this move, the analog is here in the gold stocks. But the problem is gold nor gold stock, they haven't performed the stock market. We can see it's still going up here. I mean, this is gold against the 60-40. Here was the breakout here, and we can see gold against the 60-40. There were some moves higher, but in the last month, this lost 8%. Silver against the 60-40 lost 10% in the last month. So until we get this breaking up here like that, we're in an uptrend in gold, silver, and the miners. But it's just it's nothing special. It's not a real bull market. It's not a secular bull market yet. Although I have said this breakout here, I mean, this is a new secular bull market, but we need this move in the 60-40 to confirm that. And so looking at some history here, the red lines mark when the stock market lost its 40-month moving average, which confirmed a new secular bear for the stock market. The blue lines marked when the gold against the 60-40 ratio broke to the upside and confirmed a new bull market in gold, a new secular bull market in gold. And we can see we're not there yet. So that's the bad news. We're not there yet. And, let me know what you think. Is this going to happen sometime this year? Could this take 2 or 3 years or 2 or 3 months? I mean, you guys know I'm really conservative. Gun to my head, I think it happens sometime this year. But starting off the year, at least now and over the next month or so, I'm not that optimistic. I don't know. Maybe that's a contrary indicator. But this is the big picture of where we are and what needs to happen for precious metals to get to that next level, to have an accelerated upside move. This is the only thing that matters now. I mean, this is it. You have to get this move in gold against the 60-40. You have to get a bear market in the stock market. Otherwise, money is still going into stocks. It's still going into crypto. And the problem with that for precious metals is you don't have new money or fresh money coming into the sector. You don't have speculation. Valuations are low. Valuations are at bear market levels. There's a lot of leverage plays in precious metals, and that means leverage plays underperform. Gold stocks are a leverage play. Junior gold stocks are a leverage. Exploration stocks, big time leverage play. Silver's a leverage play. So for all those things to perform, it all comes down to this here and gold making a move like that. And for that, we need the stock market to decline. So that's where we are here and now. It's really important to understand the big picture. The bull market's not over. It hasn't even started yet. So it hasn't even started. So that's where we are in the very big picture. One more note on that. Great chart here from Callum Thomas topdowncharts.com, at Callum Thomas on Twitter. I believe that's Callum. This shows gold against the 60/40, and this shows all the money in gold ETFs divided by all ETFs. And this 60/40, gold against the 60/40, this is a little bit different than mine. I think this is price only. I include dividends and total return. But you can see, this is using price only. I mean, this is a base. This is a bullish base that'll break out at some point. We hope it's this year that it breaks out, because I don't want to have to keep repeating myself in all these videos for another year or two. But look at how the allocation to gold relative to everything else, it's very similar to the 60/40. So this is powerful stuff. And look, the allocation to gold, look where it is. I mean, if we see gold underperform for the first quarter of the year of 25 and the stock market goes up, maybe this could get down to, like a 20-year low as far as the gold allocation relative to everything else. So that's a contrary indicator right there, but it's important to keep that in mind. Now, as far as the short term, I talked about this last week. Here is the ABC. The typical correction follows this pattern. And, this could also be an A. This whole thing could be the A part. And then you get a rally, which is B. And then you get another leg down. So are we in the C leg now? I mean, the market doesn't have to follow this exactly, or even come close to following it. But it's just something to keep in mind. This is the A leg down. Here's the B leg. Now we're kind of meandering. This here, I want to say, what is this, 2665, 2670? So that is very short-term resistance right here that it's struggling with. We also have this 2700 or 2705, and we can see that's clearly important resistance in a short-term sense. Looking at silver, silver, we can see this is gold divided by silver ratio. So when it falls down, it is silver's outperforming gold when this goes down. So look, this is a good short-term sign that silver is kind of outperforming, but you do have stiff resistance here at 32.5 on the daily. Weekly, quarterly, and yearly, 32 is resistance. So that this is going to be big resistance over the coming weeks into the new year. Again, good to see that it's outperforming gold. It's made a higher high here versus gold, the lower high. But, we need to see a lot more. Like, for example, the miners are looking really weak. They're not confirming this strength in silver. So we'll see, but keep in mind, big resistance at 32.5 on the daily. Now, let's get into the weekly chart. And we can see here's, I mentioned 32 is weekly, quarterly, and yearly resistance for silver. Here is 32 on the weekly. And we can see, decent candles the last couple weeks in silver, but we'll see if it can close above 32 and then actually hold it into the new year. The weekly line chart for silver, this doesn't look that bad. I mean, this looks decent, but look, we have to look at a number of different charts. And here's gold. I mean, nothing much to write home about on the weekly chart. So I'm just going to stop myself there before I, babble for another couple minutes. Before I get to the stocks, just a reminder, in the Daily Gold Premium, we cover the juniors, which we think are the highest quality, yet also have the highest upside. So we try and match those two. We're erring more on the side of highest quality until gold breaks out against the 60/40. When that happens, that'll open up a pool, slightly lower quality companies that could do really, really well in a real bull market. But they're struggling now, so we have to err on the side of quality. And, two of our recent updates, we did full updates on our top 10 and also our 7 watch list companies. So we have these tables with, it shows the cash, the net debt, market cap, and we also have about 200 words of notes on these companies. So if you're wondering, what companies we like, invest in, or we cover that are on our watch list, you can sign up, $150 for a 6-month membership, and you can immediately in a couple minutes download these updates, and you can look at these tables. It's just 3 or 4 pages of information. And so if you're not already a subscriber, would love to have you aboard. If you are a subscriber, thank you so much. I appreciate you. And moving on now, let's get to the stocks. So this is the big picture for GDX. GDX, it ran up. It actually went past resistance. Then it came down. So that's a false breakout. So clearly, this 40 to 42, it stopped here at 42, stopped at 40. So it went above it here. but now it's come back down. So we can see, this is stiff resistance here. Eventually, hopefully sometime this year, this puppy will break out and make a big move like that. Probably around the same time when the stock market cracks. Looking at the strong support, this is the equivalent to the 400-day moving average. And also, we can see this is going to be strong support. So right here, just below 33, 36.82. So, what it's roughly 10% or so downside. I'm not saying this has to happen, but it's a support level to keep in mind. Also have some initial support here at 35. Now looking at the short term, just really weak sauce here from the miners. Just look at this. These are just really weak rallies. Now, the miners were really oversold here. So this decline had to pause and stop and rest. And, I'll check my breadth indicators this weekend as I do the subscriber update. But again, you look at these candles. Now we're seeing some selling at the end of the week. These are nasty candles, right as they're coming close to the 200-day moving averages. This is the 200-day EMA for GDXJ, which supported here and here. Also here, looks like that's probably going to be tested again. SILJ, the silver juniors, yuck. This is not that great. This is not great price action. So, looking at the miners here, I know that silver is outperforming in the very short term. It's outperforming gold. That's a good thing, but we're not seeing confirmation in the miners. This is just ugly action. I'm not saying these are going to plunge like that because I don't think there's enough interest in the market for that to happen. But, these are weak, and it's probably the best course to stand aside. If you have cash and you're looking to buy, I'd probably wait at least a few weeks, see how things shape up after tax loss selling. But so even though the miners are still oversold and they could get more oversold, I wouldn't be a buyer yet. I wouldn't call these a buy yet. So we need more time. That's it for the update. This went a little long, so I apologize for that. If you made it all the way to the end, really appreciate you doing so. Thank you so much for tuning in. Leave a comment. Let me know what you think. Would love to hear your thoughts. And I hope you all have a great weekend. I'll see you on Monday for Macro Mondays.